Welcome to Realcast, the weekly roundup of the real asset markets. My name's Richard Betts, and I'm joined by Paul Strome and Nicole Dines. Nicole, let's start with you. What's your pick of the week?
Well, Real Asset Media held a briefing on logistics, which was part of Transport Logistics 2021. It was a very high-profile briefing with all the best people in the business, and they agreed on two main themes. One is that demand for logistics will not slow down as the pandemic recedes. Obviously, as Cushman & Wakefield, Sally Brewer said, online volume of retail sales in Europe in 1 year last year was more than the previous 5 years combined. So clearly there was a pandemic effect, which we talked about many times on online sales, but it goes well beyond that. And as Ben Bannatyne of Prologis Europe said, the biggest driver of growth in Europe has been the transformation of the retail landscape, and that is set to continue. And Robert Dobrisky of Panattoni said that there is demand across the board, from last mile locations, which he said are the most difficult to deliver, to the sort of the traditional big sheds in out of town locations. So across Europe and across the board, all kinds of assets are in great demand, and that's obviously pushing up prices. And Bannatyne said it's already having an impact on land prices and on rents, but it's going to have an impact on valuation. He said valuations of logistics assets will reach levels that we would never have thought possible. The other trend, which they all agreed is going to have a lasting impact, is nearshoring. Last year, we saw obviously the problems in the supply chains, and people sort of brought things closer to home from international to local or regional in order to deal with that. But again, that trend is going to stay beyond the pandemic because it's just more efficient. And it's also the other aspects. For example, Raymond Tishman of Zalando said that other factors feed into this. It's not just convenience or the resilience of supply chains, but it's also consumers and companies' interest in sustainability, wanting to shorten travel times, freight times, and also the fact that in the traditional markets like Asia and China, prices have gone up, of labor have gone up, so the sort of economic equation doesn't quite work as it used to. So a combination of factors that drive the sort of nearshoring trend that will continue for a while. And another thing everyone agreed on is that, we've talked many times about prop tech and how the effect of automation. And Ian Warboys said that automation is definitely the future, and already 20% of the Amazon workforce are robots. But they all agree that logistics remains very much a people business. So that automation will coexist with workers, but people will remain crucial because they have to do the delicate jobs, the returns, and so on. So it would be a sort of more emphasis on automation, but definitely in conjunction with workers. And in fact, they said they never hired so many workers, and workforce, labor attraction and retention remains the number one issue, even bigger for logistics companies than land, than finding suitable space. So those are the three big themes of logistics. Another thing I saw, which was interesting this week, was a BBC survey. The BBC asked the 50 biggest employers in the UK, and 43 out of 50 said they plan to let their workers go back to the office 2 or 3 times a week as they wish, sort of flexible working. And these companies are anything from banks to retailers, people like WPP, Aviva, Adecco, Capita. So they reckon they're going to need, long term, they're going to need some 20% less office space. That's the trend, to give workers that choice, that flexibility, but it's not across the board. We've seen, for example, that Goldman Sachs has told in no uncertain terms to all its employees in the UK and in the US to go back to the office in June.
Yeah, it was great to get the insights on the key trends in the logistics sector. And that discussion around nearshoring was also confirmed by Otis Spencer, Chief Investment Officer of P3 Logistic Parks, saying that the nearshoring trend will have a definite impact on the sector, and highlighting Central Europe as a beneficiary, but saying that P3 were also seeing a lot of activity in Western Europe with companies looking for additional space. It's also interesting to see that evolving discussion around office. I also saw a report from Barclays saying that office vacancies in Greater Paris, of course Europe's largest market, could reach new highs by 2030 because of the working from home trend, with potentially a 12% vacancy rate. And so there seems to be kind of very different views across the market. Paul, what have you been tracking?
I've also been looking at the working from home phenomenon, and on a macro scale, that varies from city to city, or the effects of it vary from city to city. But some cities are more vulnerable than others. Prague, Amsterdam, Munich, Budapest and Warsaw could be worst affected, according to research firm Capital Economics. The Capital Economics points out that although large cities such as London and Paris have bigger workforces and a higher proportion of workers that can work from home, that doesn't necessarily mean that they'll be the worst affected. In its latest European commercial property update, the firm says that Generally, smaller and medium-sized cities are likely to be worse off because workers are proportionately more important to the city's real estate. Students and tourists can offset some of the working from home impact, but capital economics focuses on the city-wide impact of working from home. And although London and Paris have higher numbers of workers that could work from home, the firm said that the share of remote working and its impact on the city's real estate is not one for one, because beyond the pandemic, the student numbers and tourist numbers are likely to return to near normal levels, which will compensate to an extent. Working from home will persist more in cities where there are a high proportion of industries that had a propensity for remote working before the pandemic. So IT, communications, and knowledge-intensive businesses are the main examples. And remote working will have more effect in cities where workers comprise a higher proportion of the daytime population. So that's Munich, Prague, and Hamburg in particular. And the extent to which workers travel into the city to work will also determine the degree to which they continue to contribute to the city economy, even if they work from home. So cities such as Budapest and Warsaw, which have proportionately larger daytime inflows, are likely to be worse off in this regard. Research from property investment manager Corestate and research firm Bullwein Geyser reveals that Germany's city quarters represent a market worth 200 billion euros. And the firms say there's major potential for investors. The two firms identified 616 city quarters in Germany, and the concept is perhaps a development of mixed use. We've had definable and distinct city quarters for centuries. City quarters, in their definition, is a densely built inner city area or area close to the city centre, characterised by a mix of core uses such as residential, office, retail, and complemented by other types of use. But it states there are no hard and fast rules for their definition. So different categories of city quarter have been identified: traditional, mega, small scale, commercial, residential, and vertical. But there could be other categories too. One thing that might help bring more focus to city quarters is that because they tend to be compact, mixed-use units, they play to ESG concepts and often involve regeneration and urban consolidation.
Definitely two themes that are coming through strongly elsewhere. I also thought it was interesting to see Tishman Speyer agreeing a 70 million Paris office loan with Helaba with a focus on social impact. So Helaba will partially waive its remuneration, and Tishman Speyer will make a matching contribution to a charitable foundation supporting medical research and improving the quality of care at 39 public hospitals. Tishman said the aim here was to support the extension of health and well-being beyond its own properties. So very interesting to see the social impact side coming to the fore there. And coming back briefly to the UK, we'll likely see much discussion in terms of the reaction of the real estate markets to the election results over the week, and particularly that conversation around the levelling up agenda for regional cities, and of course the likely second independence vote in Scotland. Thanks Paul and Nicole, thank you for joining us, and look forward to seeing you next week for our regular roundup of the key themes in the real asset markets.